US Secretary of Defense Pete Hegseth is in Japan. He's basically the American defense minister. He's in Japan and he has been sent by President Trump himself. Pete Hegseth's task is clear: prepare for war with China.
In news just coming in a tit-for-tat move, China has raised tariffs on US goods to 125%.
Donald Trump says he is open to talks with Chinese President Xi Jinping after imposing an even higher tariff of 125% on China.
Investors and markets are trying to digest US President Donald Trump's decision to suspend some tariffs while escalating a trade war with China.
Investors and governments around the world have long regarded US Treasuries as the safest haven, so much so that many countries have chosen US debt securities as a way to utilize their foreign exchange reserves or to protect their trade surpluses. But it also means that the US economy is becoming increasingly dependent on external financing, so which countries hold the most US debt? What are the dynamics of this relationship? And what are the implications for the global economy? Let's take a look together. US Treasury bonds have been described as reference or risk-free by investors and central banks around the world. This is rooted in the Bretton Woods system, built in the aftermath of the Second World War. The dollar's position as the global reserve currency and the perceived reliability of the US economy. Yet in recent years, rising protectionism, trade wars, geopolitical tensions, and economic uncertainties have occasionally shaken this perception of credibility. In particular, major creditors such as China and Japan are fueling discussions about what might happen if they start to reduce their holdings of US bonds. For decades, the US has relied on both domestic savings and the appetite of foreign buyers to finance its budget deficits. The total stock of US Treasury debt, publicly held obligations of the federal government, is expected to exceed $33 trillion by early 2025. The portion of this held by foreigners is also quite large, about $7.5 trillion, between $7.3 and $7.7 trillion in some more recent sources, is held by foreign investors. The rest is held by institutions, individuals, and sovereign wealth funds. Within the US, the largest share of this foreign ownership is held by East Asian countries and some European financial centers. Japan and China have long held the top two spots, although the rankings have shifted slightly over time. They are followed by fund and banking centers, such as the United Kingdom, Luxembourg, and Ireland, and in smaller shares Switzerland, the Cayman Islands, Belgium, India, Saudi Arabia, and others now. Before moving on to the detailed numerical tables, let us remind you that these data are approximate and based on the major foreign holders of Treasury securities. Reports regularly released by the US Treasury Department. 1. Japan, approximately $1.9 trillion. Japan has been the largest buyer of US bonds for many years. Japanese investors have shown strong demand for US bonds, which they see as safe in a low interest rate environment. According to the latest figures going into 2025, the value of US Treasury securities held by Japan stands at $1.09 trillion. This figure can periodically rise above $15 trillion. The large pool of savings, the yen carry trade, and the Bank of Japan's monetary policies all contribute to this trend. The strategic partnership between the US and Japan is also a stabilizing factor. 2. China, approximately $870 billion to $1 trillion. China is usually in a race with Japan for the top of this list. In recent years, however, the amount of US bonds held by China has fluctuated. The portfolio, which once approached $1.3 trillion, has decreased due to trade wars and reserve diversification steps. Data for 2025 suggests the bond stock of $870 billion to $1 trillion. For years, China invested its export surplus in US bonds, keeping its own currency stable and providing the US with significant financing. But under the so-called commercial atomic bomb scenario, Beijing could sell these bonds in the event of a conflict, putting Washington in a difficult position. Still, it's a dangerous weapon that could also hurt China. 3. United Kingdom, about $650 billion. The UK is a major hub for global funds and banks. Financial institutions in the City of London hold US bonds from different countries or their own portfolios, according to official figures early 2025. The UK holds around $650 billion in US bonds. How much of this belongs to domestic institutions and how much to offshore funds is difficult to clearly distinguish. Nevertheless, the United Kingdom is always among the top 5 largest creditors. For Luxembourg, approximately $330 billion. Luxembourg is a small country in the EU, but a giant financial center. Multinationals and international funds do business through Luxembourg to take advantage of its tax and regulatory advantages. Luxembourg is therefore surprisingly high in the ranking of US bonds. According to 2025 data, it is on the list with a portfolio of around $330 billion. That's huge for its own economy. But these are assets of international funds. 5. Ireland. About $320 billion. Ireland, another European financial center, holds a significant portion of U.S. bonds. The figure for early 2025 is $320 billion. Just like Luxembourg, the European base of many multinational companies is located in Ireland, which is why the total amount of escrow bonds accredited here reaches this level. This is linked to the fact that giant technology companies, such as Apple and Google, also channel funds through Ireland. 6. Belgium. Approximately $270 billion. Belgium also has a notable share in the list for a similar reason. The financial holdings of European Union institutions, the European Commission, some funds, international banks, and multinational companies include U.S. bonds. According to the latest data, Belgium's holdings of U.S. bonds hover around $270 billion. 7. Switzerland. About $250 billion. Switzerland. One of the first countries that comes to mind when we think of global banking, of course, has a significant share of U.S. bonds with a stock of about $250 billion. It stands out as a center where financial giants, private banks, and funds invest in U.S. debt. 8. Cayman Islands. Approximately $240 billion. One of the emblematic centers of offshore finance, the Cayman Islands is where various funds and hedge management companies meet. According to records, around $240 billion worth of U.S. bonds are held in Cayman. The real owners may be in different countries, but in official figures, this amount is written in the name of the Cayman Islands. 9. Taiwan. About $220 billion. Taiwan is an important economic and geopolitical partner of the United States. Taiwan's central bank and insurance funds, which have bought U.S. bonds on a large scale to utilize its trade surplus, have a portfolio of around $220 billion. This puts Taiwan among the top 10 creditors of the U.S. 10. India, about $210 billion. India, with its growing economy and foreign exchange reserves, is also one of the countries that has turned to U.S. bonds. According to early 2025 data, the value of bonds held by India is $210 billion. With a rapidly growing economy, India is turning to U.S. paper to diversify its reserves. In addition, many countries such as Brazil, Saudi Arabia, France, Germany, Singapore, and others hold bond stocks in the $100, $200 billion range. These figures change periodically, and sometimes countries like Mexico or Israel move up the list. But the overall picture is that Asian and European financial centers and Middle Eastern oil producers are the largest external creditors of the United States. Around $7.5 trillion of the total U.S. external debt is held by these actors, while the rest is held by institutions within the U.S., individual investors, and public institutions, such as the Social Security Fund. The key point here is that the ability of the U.S. to sustain this level of borrowing at low interest rates is linked to the reserve currency status of the dollar. Because billions of dollars of global transactions flow into U.S. bonds every day as a safe haven, this provides cheap financing for the U.S. Treasury. But if major bondholders, especially China or Japan, start to reduce their portfolios, U.S. interest rates could rise, the budget balance could suffer, and the economy could slow down. Hence the trade atomic bomb analogy. If trade wars deepen, giants like Beijing could play the bond card and shake U.S. finances. Of course, everyone thinks that such a big move would bring unilateral destruction, because countries like China or Japan would also suffer losses on their remaining assets if bond prices fall at the same time. The shrink in U.S. market and the depreciation of the dollar could negatively affect their exports. In practice, therefore, no one would fully engage in bulk selling. But even selling enough to have an impact on prices is enough to create fear. This fear could lead the U.S. to make political concessions or to adopt a softer stance at the negotiating table. It is this uncertainty that occasionally emerges as the biggest stress in world finance. For example, every time U.S.-China trade tensions rise, the question, will China sell its bonds, creates turmoil in stock markets as a result. When we look at the list of countries that the U.S. owes money to, Japan and China come first. This is followed by the United Kingdom, Luxembourg, Ireland, Belgium, Switzerland, Cayman Islands, Taiwan, and India. Total foreign ownership is around 7.5 trillion tolls, equivalent to about a quarter of the U.S. public debt. This structure locks the U.S. economy to the world. It cements the ties between foreign policy and the economy. At times, the view is that back-to-back giants can hurt each other, while at other times, warnings are issued that the cards could change at any moment. There is concern that if political tensions deepen, these figures may not just remain in the lines, but may turn into huge waves of sales in the market. How do you assess this picture? Do the countries holding the U.S. foreign debt really constitute an economic weapon? Or does global interdependence not give anyone the opportunity to launch such an attack? Could China or other giant creditors use the bond trump card when trade wars deepen? Please don't forget to share your thoughts and subscribe to our channel to follow this kind of content closely. One of the most important agendas of world finance is the question of who owns the US debt and who is thinking of selling it, because the numbers are so big that even a small shift can affect interest rates, the value of the dollar, and the course of the entire global economy. For now, all actors seem to be acting cautiously, but unexpected developments can change the course of history. Until next time, goodbye.